Good morning, everyone. Jeff Clark here. Um, we'll be doing the critical cash product today. It's a webinar that I haven't given for some time. I usually do the different topics. So for whatever reason in our rotation, I haven't given this one for, boy, I bet you it's been a couple of years. So the product itself is great. I personally do write this plan. When I get declines on my long-term care, it's one of the first places I look. So I'll go ahead and try to go through this. I'm going to skip out of this a little bit and probably take you to software to show you how to design some plans. And that software is something that we can forward to you if you don't have it. So maybe even at the end of the webinar, we do give a copy of all these presentations to anyone who attends. Maybe I can talk Linda also including that software in the email at the end of this. So without that, let me go ahead and move along here. So critical cash. Great little plan. We used it originally as a alternative to long-term care. What we did here is we built a long-term care plan on a critical illness chassis. If you look at critical illness in general, it's very close to a long-term care policy, but it has defined covered conditions that you get paid for. So it might be, a heart attack, a stroke, cancer, become disabled. So it paid you a lump sum of money for upon diagnosis of a stroke, heart attack, cancer, or what have you. So what we did is we kind of went to different carriers and we arrived at Guaranteed Trust Life, GTL. We kind of said, can we take this thing, instead of paying out a lump sum of $200,000, can we somehow just maybe break that into monthly installments over a 2-year period? Can we cover assisted living? Can we cover home care? And so, again, this is kind of a long-term care plan built on a critical illness chassis. So it makes it a really unique product, but in some ways it's stronger than long-term care because of the diagnosis, and I'll cover some of that. But that was kind of the premise of where this came from. And we've just had a lot of luck with it over the years, helping people kind of find another solution to long-term care needs. So let's see if I can get this to move along. All right. So a simple application, simple underwriting, all that's true. Today, again, we'll talk about the carrier, product niche, old versus new, plan details. They'll do that underwriting. I don't know if we'll do a whole lot in completing the application. I'm hoping at this point in your insurance careers, you can figure that out. There is an e-app for this product as well, so we'll maybe give you a link, or there's a how to use their e-app. But we certainly can give you a copy application. Pretty simple. It's about a 2-pager. So I do like what GTL is, that neat little carrier. We've been working with them a lot over the last 10, 15 years. They have a lot of these what I call senior niche products. Again, neat company, things like hospital indemnity, cancer plans, and home health care plans. This particular one, it's kind of a comprehensive home health care, assisted living, and nursing home, all kind of wrapped into one. So it's like a short-term care, but even a little stronger. So anyways, neat company. They're out of Glendale, Illinois, Chicago area. So couldn't be happy with GTL. We've had a great partnership with them. A- rating for them. And again, just a good group of products here. They just have all these little niches, again, whether it's supplement, the critical cash, the home care only, or the hospital indemnity, they certainly have found their niche in the senior products that are so needed out there by the market. So, okay, that was really weird. Not sure where that came from. Okay, quick glance. And I'm going to bring the software up eventually here. So if you'll notice here, and this is a pre-summary slide. I'll bring the software up. But what you're buying here is you're buying a bucket of money. So again, for people who can't get maybe long-term care, you're buying a bucket of money that essentially can get paid over a 24-month period at $5,000 a month for nursing home, $2,500 for assisted living, or $1,000 a month cash. So again, set up to kind of be like a long-term care policy. It's a bucket of money that can pay all 3 areas: home, assisted living, or nursing home. All right. So why critical cash? And I might go a little bit off a script here, just kind of talking to agents here is kind of my style on this, but this over 70% of long-term care claims paid, interesting here, most of long-term care claims are going to come from 3 things: cancer, stroke, and dementia. Those are kind of the 3 big ones that really generate most long-term care claims. They're also the most expensive long-term care claims. So if you look at it, those 3 conditions cause 70% of long-term care claims. But keep in mind that those, because they're such big payouts, they represent close to 85% of actually claims dollars that are paid out. So what we're doing with critical cash is we're grabbing the most common Alzheimer's, stroke, and cancer. We're trying to grab most of the things that could cause long-term care, define them, because remember, in a critical illness plan, you have to have a defined condition to pay. So by covering the Alzheimer's, stroke, and cancer, we're capturing about 80% of what long-term care claims are. So it's really, again, the 7.5 million Americans are protected with long-term care insurance. 49,000 new Americans obtained LTC insurance coverage in 2020. 12.3 billion insurance claims have been paid in 2021. We know this stuff is needed, and so many people can't get long-term care now that you really have to, if you're in this market, have an alternative place to put them. So let me see what the next one here. Well, sound effects. You guys are maybe hearing that as well. Combining two products here, and I've kind of already stole my thunder here, but we did. And we took a long-term care plan and a critical illness plan and kind of combined them. And that's kind of the premise behind her, because the long-term care underwriting has gotten tough. If you've been in this market, you know it's hard to place long-term care plans. So we do look at the critical illness as a way of kind of covering a lot of those things that you can't get covered. Maybe someone had scleroderma or some, obscure thing that knocks them out of a long-term care plan, but we can go back and at least pick up the big ones, the Alzheimer's, the cancer, the strokes. So it's important to get that something for your client. All right. Acceptable conditions, and this is kind of what we're talking about. Remember, this is an alternative. I don't start someone on this plan. If someone has unlimited budget and they can afford it, they understand the need. If their health is going to allow it, I'm going to sell them a full-blown long-term care plan, right? So I can pick up the abstract things, like scleroderma or mysanthia gravis or other conditions that, again, this won't pay. With this particular plan, we can take people on Social Security disability. We can take people with lupus, scleroderma, walking aids, a cane or three-prong cane, severe back pain, nervous systems, narcotic pain meds, we can take it. Mental disorder, depression, anxiety, bipolar. How many have you lost recently in long-term care to mental disorders, right? Or sleep apnea, memory issues, not diagnosed with dementia or Alzheimer's. In other words, people get forgetful as they get older. So again, not a problem there. Acceptable conditions, again, severe osteoporosis, diabetes with more than 50 units of insulin, with good control, etc. Physical therapy, even if current and ongoing, joint pain injections, cancer, pacemaker, rheumatoid arthritis, fibromyalgia. All these are knockouts for traditional long-term care. We can pick up or give them some help in these areas with critical cash. Okay, covers where LTC won't. So with this one, it's the diagnosis thing. It's not the 2 out of 6 ADLs. It's not the 90-day certification period. So it's upon diagnosis of a covered condition. So, and as soon as your doctor diagnoses that, yes, you had a stroke, yes, you have cancer, this thing is going to pay out the entire $200,000 broken in monthly benefits, regardless if you get better or not. Okay, it's coming to you. Much easier triggers because, again, you don't have to worry about a doctor signing off on a 90-day certification period. You don't have to worry about having 2 out of 6 ADL deficiencies, which in their estimation is going to last longer than 90 days. It's quite simply, if you get diagnosed with that condition, the pay starts. All right. Covers where LTC won't. Well, these are kind of interesting here. Heart attack isn't typically a long-term care claim. You have a heart attack, you might be in the hospital a couple of days, you go back home, you recover. Even bypass surgery, that's going to be a pretty short-term thing. Most people are back on their feet within a month or 2, 3 at the most. They're not going to hit the 90-day certification. For kidney failure, organ transplant, heart attack, bypass, these are all covered in a critical cash plan. You're not going to get coverage for that for long-term care. Oh, and they put a note in here that selling the critical cash also, if you're one of those people who doesn't do much with long-term care, maybe you're not currently partnership certified, that long 8-hour course you have to do. So maybe you have a couple of clients that aren't that real, because ironically, when you're out in the field, people who ask you about long-term care, you always kind of wonder. If someone called me asking me, hey, do you sell long-term care? I've got an uncle or I've got an aunt. I'm always ready to say, well, what's their condition, right? So, and then you have to get partnership certified. So a lot of people don't. So if you have some people, and I bet you do, that have come and asked you for long-term care, know that you don't have to do your partnership certification for this plan. You can write this today. Okay. It's approved in 36 states. I'll give you a complete list of that. You'll get a copy of this presentation. I don't want to read them all to you, but most of the states it's in. I know it's not in a couple places, New York, the typical suspects, Georgia, Florida, the normal tough states to get things approved, California. So, but otherwise, it's in a pretty good swath of states there. Okay, flexibility. So what does the plan cover? This is, again, in the brochure. It's a little cut off from that, but this is basically Plan A. This is the full-blown thing, okay? So it covers if you get cancer or cancer in situ, which is basically cancer that hasn't moved around the body yet. Maybe it's just diagnosed. It hasn't, they always look for cancer screenings. Has it moved anywhere? Is it contained to one spot in your body? So cancer in situ is cancer that hasn't moved yet. So cancer or cancer in situ, stroke, heart attack, coronary or artery bypass surgery, Alzheimer's disease, kidney failure, major organ transplants, paralysis or coma. Again, if you add up all the things that critical cash covers, it covers 70% of long-term care claims. But remember, it covers about 80 to 85% of the actual claims dollars paid out for long-term care claims, because these, what you're looking at, are the very most common things that cause a long-term care claim. So we've taken care of all the biggies. So essentially, yes, you've probably got 80% of things covered. This is why typically premiums were about 80% of what a long-term care was going to be. So when I design things, I try to come back to them saying, look, it's not going to cover everything, but it's a little less expensive, but we are going to pick up a lot of the big risk. And I think people can relate to that. I've always found that when people get declined in long-term care, it should create a little urgency in them. In other words, look, smart people, these underwriters, they've examined your medical records, they've looked at your case, and they've analyzed it, and they're pretty convinced that you're going to be a claim. So if anything, if you get declined, I've always thought it should create a sense of urgency in your clients, or as an agent for your clients, to go back to them with another option in this. So come back and lay this on the table, that you get all these things covered. In the situation they have a claim, I can't cover you for long-term care, but I can take care of a lot of the biggies, a lot of the main conditions. Okay. So this is the part where we're going to explain how the plan works. And I'm going to try to make this as easy as possible, but it is, just keep in mind that we're taking a chunk of money and we're breaking it into monthly installments. Okay. So I can pick if I want to have 6 months, 12 months, 18 months, or 24 months. So basically a 6-month plan, a 1 year, or a 2 year, right? I can tell you that when I use this plan, I'm almost always going 24 months, right? The whole idea is I'm coming off of long-term care. I want to give them as much benefit if I can get them, okay? Again, this is in page 4 of the brochure, same thing of covered conditions, okay? And as long as we have that one up, let me just show this again. And I think this comes up later in the presentation. Again, I apologize, I haven't went through this for a while, but Plan B and Plan C over here. So let's say someone has had cancer in the last 6 months, year, what have you, okay? They're knocked out, they can't get a long-term care plan. Well, in that case, they can pick up Plan C. They can get coverage for stroke, heart attack, coronary, Alzheimer's, kidney, all this stuff. They just can't get covered for cancer. So that would be a Plan C candidate. We call it the Cardiac Care Plus. Or if someone's already had a heart attack, right? Or they've had a stroke, but they still can get the cancer coverage along with Alzheimer's, kidney, major. So that's where the flexibility of it is here. Naturally, you want to put everyone with Plan A so we can cover everything. But if they've already had a stroke or had cancer, it doesn't eliminate them from getting this plan, okay? Naturally, we can't insure cancer if they currently have cancer, they had cancer last year, or if they've already had a stroke, but we can cover the other conditions that cause long-term care. All right, so let me move on to a couple slides up here. Okay, so base benefits. This is what I like to call the home care or the cash amount, okay? So you choose your monthly benefit. You can do it in $500 increments. So $1,000, $1,500, $2,000, $3,000, $4,000. This is basically, or excuse me, in $250 increments. So these are paid basically in cash. So at $2,000 a month, 24 months worth, you can get $2,000 a month cash, or you can get a lump sum of 24 months times your $2,000 of $48,000. Okay. Again, this is the 24-month design. If you went with 12 months, it'd be a little less. But again, I always use 24 months on this. Okay, this base amount is a pure cash amount. It's paid, remember, no elimination periods, no 90-day certification. If you get diagnosed with a stroke, the next day you can get $48,000 here, or you can start getting $2,000 a month to pay family and friends who are going to help you out. Okay, that's the base benefit. That comes no matter what happens. You're getting paid that money, and if you don't, it can go to your kids. Regardless if you're getting care or not, this money's coming. Okay. Ability. Now, with that base benefit, I can also, let's just say the example I'm going to use is I had a stroke, okay, and I got diagnosed with that stroke. I took a lump sum, I took $48,000, but that stroke has landed me in a nursing home, okay? So what I did then is I had that $2,000 a month benefit. Well, I added 4,000 more in case that stroke landed me in a nursing home. I've already got my 48,000, but now I get 4,000 additional for the nursing home. So in other words, I got a total of 6,000 there, but I get 6,000 for 24 months. And the assisted living just automatically pays 50% of that. So, for me, if I'm selling this, I'm going to probably put some nursing home benefit on there. I'm going to put some assisted living benefit on there. I'm going to jump to the software, and I'll tell you why. Let me do one more. I'll do that. You can claim multiple times. So benefits can be restored. So let's just say you do have that stroke. You get the 48,000 lump sum. Then maybe you're in the nursing home for 6 months of it, came back home, recovered, or that claim, that wave hit the beach. 12 months go by, this pot of money, if you will, is back. You now can reclaim again. Maybe then later you get Alzheimer's. Had a stroke, 5 years ago, and then later in life you got Alzheimer's. That's gonna be a second claim. You can actually claim it with 3 times or more. It's kind of rare, but we used to have a slide that talked about Vice President Dick Cheney. While he was in office, 2 terms with Bush, I think he had bypass surgery twice. He had 2 heart attacks. He had like a mild stroke. He would have actually claimed like 7 times on this particular plan. Okay, so let me calculate. And this is okay. 24-month benefit. They took $1,000 on the base benefit in this example and $5,000 on the nursing home. So that's a total of $6,000 a month, right? So if it's reusable 3 times, 6,000 times 24 months is 144,000. If it's reusable 3 times, that's a pot of money of 432. Let me show you in the software because I feel like this is an easier place to do it. Return a premium rider, I'll just be honest with you, I don't sell it. I don't think it's that very attractive. I guess for some people it might be. If you live beyond your 80th birthday, you're not, that goes null and void. You don't get your money back. So granted, people that are looking for this plan are probably a little less unhealthy. So it does return all your premiums, less claims, if the rider's in force and you pass away before your first policy anniversary when you're 80. So essentially, if you live beyond 80, the return of premium rider's off the table. I end up selling this to a lot of folks that are, in their latter 60s or early 70s because they got decline in long-term care. I personally don't put this return of premium rider on very often, but for some folks, if they got plenty of money, maybe they just want that assurance they'll get their premiums back. So I take the grain of salt. Let me escape this down. Let me go look at the software. I'm trying to explain how to put together plans again better for you. So this is the software that they came up with. And again, I'm hoping Lynn is looking at this as well, so you can see this. I'm showing you here. So this is This is actually a software that GoldenCare put together for Guaranteed Trust Life. Okay, I'm getting thumbs up. You guys can see this. So this is actually put together by Tom Randall, a really brilliant spreadsheet guy that he put together this as a nice way of quoting it and to kind of illustrate it better. If you go on to GTL's website, to do the quotes there, it's pretty vanilla. You've got basically here's your premium and just gives you a total benefit. So there's really a lot to be for your client, not much for your client to look at. So we went ahead and put together this. I think is pretty easy little software to work. So I'm just going to give you an example. Okay, let's just go with this is Roger Dodger. Let's just say he's from Illinois. No, this is the agent is Roger Dodger. How about that? Okay, client Jack Doe. This is someone I'm just going to put on here that's 60 years old. Male, female, doesn't matter. So what I'm going to do is I'm going to Start out with a benefit of about 1,500. Now let's do 2,000. Okay. Now remember, that's the base benefit. This 2,000 right here, this comes to you regardless if you get better from that stroke, or this is going to go to either you or your beneficiary upon diagnosis. You can either get 2,000 a month for the 24 months, or you can get a lump sum of 48,000. Now, I'm going to always add, I'm going to add the $4,000 to this benefit. Now, I can max this thing at $6,000. My total benefit I can do, the most I can ever do with this thing is 24 months and $6,000 a month benefit. So the only question I'm doing here is what combination of this base and facility do I want to do this 3,000, the total of 6,000? I can tell you that this base benefit makes up about 90% of the premium. So it's cost next to nothing to throw the nursing home benefit on there. Let me show you what I mean. First of all, let me put 24 months. Let's put this on annual. Okay, here's the annual premium. Okay. So this particular design here, this is again a 2,000 a month. Let me show you how it illustrates. So I got a 60-year-old, plan A, right? He didn't have a heart attack or he doesn't have cancer or something, so we went to comprehensive coverage. 2,000 base. Again, I'm always going to max that out at a total of 6,000. And I'll show you why here. 24 months. What does that look like? Okay. So first of all, the premium in this is $2,452, $200 a month for Jack, right? That's a pot of money of $432. Remember, because that's $144,000, which is a full payout, 6,000 total. So 2 years at 6,000 is 144 times 3. Remember, you can reuse this 3 times, 432. So what I'm doing here is I'm buying a bucket of money. But if I end up having a stroke, remember, I'm going to get 2,000 a month for home care or forever, or I can take a lump sum on that at a total amount. 24 months, this would be $48,000. But that stroke landed me in the nursing home. So I'm going to get an additional $4,000 a month if I'm in that nursing home. Let's just say I was there for 12 months, but I got better, eventually came back home. Well, I stopped getting the extra $4,000 a month when I leave the nursing home. But remember, the cash amount, that I keep no matter what. I get that up front. It's coming no matter what. It's the base benefit. If I end up in the assisted living because of that stroke, by the way, the policy kicks me an extra $2,000 a month as long as I'm there for a period of 24 months or when I leave, whichever is sooner. Okay, so look at this premium now. It's $24.77. So I want to show you something here. And this is what I tell people when I'm talking to my brokers, agents. I always am going to have a total of 6,000 here. So let me just show you, if I were to change this, I don't know, 1,000. Okay. And now, of course, I want to max it out, right? Well, first of all, let me just show you something before I do that. 2,000. I'm going to say here, I'm going to do the minimum. I can only do 500 is the absolute minimum. I had to put something in there, so I'm going to put 500. Otherwise, I'm not going to really add any. You see what changed the premium there? It was 2,400, right? Let's see, what was it? It's 2,311 now. So for me to go ahead and max out that nursing home amount, which I'll tell you always, you never don't do this. You always max out the nursing home. So if I'm going 2, I'm able to add 4,000 because remember, can't exceed 6,000. So, but now it's 2,400 instead of 20. So in other words, for me to get that 4,000 a month nursing home, it breaks down to about $10 a month, right? The rest of the policy is $200 a month, but that nursing home coverage is $10 a month. We never don't put it in there, okay? So now this is 2,400. Maybe this person only committed to about 150 a month before, so their annual premium was 1,800. Remember, I got lots of room here. That base benefit comes no matter what. I can drop this base benefit to 1,000, okay? That means, of course, remember, I'm gonna max this out to 6. That means that's gonna let me do my facility then. It'll go as high as 5,000 now, okay? There's my total of 6. Now the premium's 1,400, right? Now we're at $100 a month. So that part of the benefit is really a big driver of the premium. And honestly, it is all cash. And so when I'm writing this plan, people sometimes have just gotten declined on a $2,500, $2,800 long-term care plan. It's not hard for me to come back and put something that's $2,400 in front of them. So if this person spent about $1,800 on their long-term care plan, I might even split the difference here. I might go $1,500 that. And of course, remember, and it won't let you quote anymore. I'm over 6,000 now. So I'm going to do, 6,000 here. I can do 4,500. All right. Now that premium's 2024. And what does that look like? Remember, I get 1,500 in home cash, all 24 months, no questions asked. I can take that as a lump sum, or I can take it in monthly installments, right? If that stroke or if this cancer or this Alzheimer's lands me in the nursing home, I get my 1,500 a month plus my 4,500 additional for being in the nursing home. Total of 6,000. So in a nutshell, and we'll send you this software. I hope what I just kind of showed you helps. Not much to input here. Name, state, etc., tobacco use or not. That's it. There's your 400. And then now if this person had a stroke already, let's just say they've had a stroke, so I can't get them the cancer care. I can get them the cancer care plus. I can't get them the cardiac care. Okay. Well, now that premium just dropped to 1,380. That just means I'm not going to have coverage for a stroke or heart attack. Or conversely, if I were to go to the cardiac care, now I do have coverage for heart attack or stroke, but I don't have the cancer part anymore. Again, you see it drops the premium significantly because we're not covering those conditions. Very flexible. We'll send this software out to kind of help you play with this. I know it seems a little convoluted. Just take this away from this. Always use 24 months and always use 6,000 total. If you have to cut back on the base a little bit to get the premiums down, that's where I do it. I don't certainly cut the months. I don't cut the facility benefits because it costs next to nothing. So if this person really can only afford $70 a month, then what's wrong with, let's go back to comprehensive. I don't think there's anything wrong with giving them a $1,000 a month benefit, or maybe a $500 a month benefit, and do the nursing home here. So this is just catastrophic cover. This is telling me that in case I end up in the nursing home, this is only how much a month. So this is $79 a month. It's going to cover 6,000 in nursing home per month, but it's also going to give me $500 a month cash. I can pay a spouse, pay a friend, a relative, or all 12 months of that would be a cash payout of $12,000 immediately to help keep you at home. If you end up in the facility, I got $5,500 more to help. So you can really be flexible with this premium as well. But for me, I'm always on 24 months. I'm always at a total of 6,000. Okay. All right. I think I've driven that point home enough. Let's go back to that PowerPoint. Let's make this a little bigger. Okay. So the cash, and these are just some wrap up things, and I'll go ahead and kind of bring this to an end. The cash can be used for anything. And this is the whole power of cash. We all know in long-term care plans, the cash benefits, it's just cash is king, right? I'm a guy that's written 700 long-term care policies. I get claims about once a month. And invariably what I hear from people is, can I pay my spouse? Can I pay my daughter? Can I pay the neighbor kid who's, shoveling my walkway or raking my yard, or the church is bringing me meals? There's all this informal care that's not a licensed home health care agency. So the need for cash or flexibility is big. This has that. It has first day cash that can immediately help people. Okay. Then it has some backup in case you end up in a facility. So as a alternative to long-term care for people who can't qualify for that, if you take a hard look at this plan, and I hope the benefits I showed you, I hope you can kind of follow that. It's a nice way of putting together a little benefit package. Now the example in here, I wouldn't do this. So I'm not sure who put this together, but this example, they're saying this is a claim example. Okay. Now this is what Bob had bought. He bought an 18-month benefit period. I would have sold Bob 24, but let's just go with this. He did $1,000 monthly base benefit, and of course he maxed it out to the 5,000, right, for the facility benefit. So that's a total of 6. We got that right. Okay. 18-month benefit period. So Bob had a stroke. He was able to stay at home the first 3 months, right? Then his care really progressed to the point where we need to be in a nursing home. So he spent the last 15 months then of this claim in the nursing home. So first 3 months, Bob chose a lump sum. He gets $1,000 all 18 months. He picked up 18 grand. Again, maybe he's paying the spouse, maybe he's paying the neighbors, the sons or daughters that maybe didn't work for a month to come help dad out. Okay. Eventually went up in the nursing home. Now he has access to the additional $5,000 a month. So for those 15 months, he gets paid out another $75,000. In this situation, this policy paid him out $93,000. Okay. I'm going to do one more. Okay, it's Bob again. This time Bob bought it again, an 18-month period benefit period. Shame on this agent for selling 18 months, but $1,000 for monthly benefit, $5,000 for the facility. Okay. He was able to stay home for 3 months. Then his care needs progressed and he was admitted to a nursing home for 15 months. This looks like the same slide to me. Whenever we're looking at a difference here. Examples purposely not actually. Okay, they're just reiterating the same point. Stroke, so I just told the story. Stayed home first 3 months, next 15 months in the facility, got the lump sum, 18 grand, received another 75,000, total is 93. Oh, they're gonna go through all that one. Okay. Now remember, Bob can claim again, right? That's the key here. Now he comes back home, recovers, maybe 2 years, 3 years, 5 years later, he develops dementia or Alzheimer's. He can claim again. All right. So this is critical cash. We're going to send you a copy of this. I hope what I did kind of helps you with that. Just first of all, I want to thank you for coming on board today. The biggest thing to remember here, the biggest takeaway, is we do have alternative plans. Not everyone's going to get long-term care. Matter of fact, it's getting harder and harder to get long-term care. More carriers have left the market. We're down to about 3 you can sell. Those particular carriers kind of get all the business they want. So they're getting kind of persnickety about what they're taking. So as agents, we have to be more creative with coming better solutions for people for lots of the ailments that are keeping people from getting long-term care, a lot of the knockouts, a lot of the decline cases. So this is a great alternative, one of your first places you'll look if you get a declined long-term care plan. So if you do have a couple of declines the last 6 months, you want to bounce them off us, I strongly suggest you call our marketing office up here. We'll help you design this. We'll shoot you the software. We'll get you the app, the brochure, so you can look through the underwriting questions. There's about 5 questions in there. You can't currently be in a facility, obviously. Can't currently have Alzheimer's, but outside of that, it's going to get issued. Okay. They basically do a pharmaceutical poll. There's no medical records unless they need to. Like if you say you've never had a stroke, you've never had cancer, you don't have dementia, and they find on your pharmaceutical check that you're taking 3 dementia medications, they're going to say, you know what, we might need to see your records now at the applicant's expense because something's not jiving. So generally speaking, they don't do medical records. They just do a pharmaceutical check. They're going to issue a policy within 7 to 10 days. So let us help you get started on this. If you have some decline cases, you have some people that might be candidates for this, give us a call. 800-842-7799 is our marketing office, or you can email marketing@goldencareusa.com. Let's say our number one more time, 800-842-7799. Want to thank you for coming on this webinar, any of our webinars. Do keep in mind that we do keep all of our webinars. We keep a library on our agent site, GoldenCareAgent.com, where all the presentations are recorded, whether it's myself giving it or some of my colleagues, John or Tom Randall. Sometimes it's nice to hear the same product with someone else kind of explaining it. But we have all the different topics, products, selling tools, all in a library of recorded trainings. So if you can't miss an event sometime, just be aware that's there. Long-Term Care Awareness Month is next month. So I suggest you hammer that. We do have little, flyers, email blasts, social media posts that talk about Long-Term Care Awareness Month. If you need those, just, talk with our marketing department, give us a call. We'll try to set you up with some of that stuff. Lynn's probably loving that I'm pretty sure we have all that put together. I think I've seen some emails on that. So with that, I'm going to let you guys go. Thanks for coming on board. Thanks for all you do out there, and good luck selling. Give us a call if we can help you in any way. Okay. Thanks a lot.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.